Let's get to Matthew McCormick, who is Vice President, Portfolio Manager at Bahl Gaynor. He joins us now from the States. Nice to have you on board with us, Matthew. And give us a sense of what we're going to get out of the FOMC this time.
Good morning. I don't think we're going to get much change in news. I think everyone's going to be looking for what Bernanke may or may not say. I expect to continue dovish language, and I think people are going to be looking for signs or clues of potential tapering. Most people on Wall Street believe that that will occur sometime in September, possibly October, and I think it's going to be a little bit less than what he was talking with the 85 billion, Karen. I think it's going to be around the 20 billion range. I think the market is addicted to liquidity, will not like it, and I expect more volatility if that tapering does occur.
Just mentioned a 2 number there in terms of how much tapering should be taken off. Others are saying less, some are saying 5 billion a month. So the volatility around just how much of a retraction we could see on these asset purchases, to what extent will that drive market action?
I don't think the amount matters. I think the act matters. And I think when you look at what has happened, whether QE1 ended, QE2 ended, every time that happens, the market had a temper tantrum. You look at just the discussion of tapering caused volatility to occur in June. And I think this is something, when you look at Bernanke's legacy, I do not think he's going on to leave Yellen, who's going to be the likely successor, holding the bag. And I think he wants to have a clean slate. And I think he does not want his legacy be one to be known that he is addicted to market liquidity. I think he's going to make the decision regardless of what the data shows, and I think the market needs to understand that. And it's almost, when you look at the summer rally now and you're looking at the anticipation, it's people know it's coming, but they don't really want to address it. And I think the amount is somewhat irrelevant. It's the act that will cause the markets to have more volatility.
We're just showing a curve, and you can see after the rally we've had, we've stabilized there a little bit, almost as though investors are too trapped, too nervous to make a move now. So despite the fact yesterday we had all this M&A activity that should have moved the markets, we didn't see that. So what are we going to see when Ben Bernanke speaks or the statement comes out, and what's the reaction going to be this time?
I think the market is going to trade somewhat sideways. You're seeing futures somewhat flat. Yesterday was essentially flat. I think the market's going to trade up on anticipation of, again, dovish results. And then people are going to start focusing to the Friday's jobs numbers and other signs of data. This is going to be, I think, a very volatile week. And I think you're also looking at GDP numbers that will give some cause for concern. Macro events are still having issues. I think the earnings environment has been better than expected, even though it's somewhat weak. Revenue has been weak. I think really what the other cause for concern I think people will have is looking at data points and also concerns about potential political or geopolitical events. I think the market is going to trade up in anticipation of the release and then go again flat, waiting for Friday's results, Karen.